Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the markets for the week of the 28th of February until the 4th of March. Now, as always, before we get started, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategies. Any information that relates to past performance is not indicative of future results. Now, we'll be kicking things off with stocks as we always do with the weekly webinars. Two names that have been in the spotlight for the past week have definitely been energy-related stocks. The ones that I'm specifically referring to are Chevron and ExxonMobil. I'll just pull up the chart of Chevron in the meantime, since we'll be covering those two. Just leave it on the time frame, on the daily time frame. I'm pretty sure that most of you are probably aware of the current situation between Ukraine and Russia and their ongoing conflict. Something worth noting for those who don't know is that during periods of conflicts is that energy related as well as defense related stocks generally tend to rise in value. Energy stocks before obviously fighter jets, military vehicles, and so on and so forth, they need the fuel in order to operate, and defense related stocks, well, because it's, their line of business as well. Over the course of the past week, ExxonMobil rose by 7% and Chevron rose by 11.5%. So we can clearly see this general strong upward movement with regards to the past week. This was the close of last week's Friday, this candlestick here with regards to Chevron. And we can see with the open on Monday how the price strongly gapped up and essentially continued gapping up on the following day on Tuesday. And we pretty much had this strong upward movement throughout the whole week. But this whole move, as I said, it was essentially more or less 11.5% a rise in value. If I switch to ExxonMobil, we're going to see a similar picture being painted there as well. Although it might seem not as strong as Chevron's move, we can still essentially see that with the open on Monday, we did gap up again, even though prices did close a little bit lower on the day itself. Over on the week, it still finished the week higher, with Friday posting a pretty significant gain as well. Now, things are still quite uncertain as to when this conflict will likely end. I mean, it started pretty much about a week and a half ago. They are still in discussion, the Ukraine and Russia delegates, but still nothing has been agreed. So obviously the date as to when this is going to end is pretty much non-certain at this point. So this could imply further volatility with regards to these two stocks, specifically for the following weeks to come. Obviously, we've seen how this rattled markets overall in general, but you have specific industries that are affected more than others, energy being one of them. So we can see that if we look at both ExxonMobil and Chevron, something worth noting if I just switch on the weekly time frame as well. So this is the start of the year essentially, and we can see around about this point with the start of the year and even a little bit before that. So if we look towards, I'd say November is when we first started having the first reports about the Russian army starting to basically organize itself around and along the Ukrainian border. And that's when prices slowly for ExxonMobil started being propped up higher. We had these strong weekly moves here, as we can see. Now with this candlestick being last week's performance as well. So with the first reports of the indications that could lead to a full-scale war between Ukraine and Russia is when we started seeing the prices rising. If I switch to Chevron, we're likely going to see a similar picture as well. So again, the first reports started coming in around end of October, beginning of November. So prices were consolidating here. And then we started seeing this general strong upward movement with regards to prices. So yeah, this is regards to the two main stocks that were in the spotlight. Obviously, we had some other strong moves as well. But again, the energy industry is one of the ones that is quite strongly impacted by this whole ongoing situation. Next up, we're going to be moving on to Forex, where the main focus on Forex was on safe haven currencies, such as the Swiss franc and the Japanese yen. Again, this is also given the ongoing conflict between Ukraine and Russia, which, as you can already tell, is the main theme with regards to this week's look back. If we look at some cross-currency pairs, let me just pull up the euro first. So if we just look at the euro and the Swiss franc, we can basically see how it plunged by 3.91% on the week, or 407 pips, and it's pretty much all within this red candlestick. We can pretty much see no upward movements. With the beginning of the week, we just propped up a little bit higher here, as you can see by this week, and ever since we've just been trending lower and lower, still trading at the lows towards the very end of the week. If I switch on to the euro Japanese yen, similar picture. Prices dropped by 3.76%, or 489 pips respectively. These are, I would say, pretty uncommon moves when it comes to Forex. Seeing these types of percentage moves over the course of a week, you don't really get to see that with Forex. You can easily see that with stocks, individual stocks themselves, as we saw with Chevron and ExxonMobil previously as well. But with currencies, it's a little bit unheard of to see these kind of moves happening frequently on a weekly basis. Meanwhile, if we also look a little bit at the pound as well, if we look at the pound Swiss franc, again, similar picture. It dropped not as much as the euro, but it still fell by 2.15%, or 260 pips. And then we also had the pound JPY, which fell by 2%, or 211 pips respectively. Now, aside from the Swiss franc and the Japanese yen, which are considered the safe haven currencies, it's also worth highlighting that the Canadian dollar as well as the Australian dollar made some very strong movements this week. The Canadian dollar due to its correlation with oil, and the Australian dollar due to its correlation with gold, which also rose in value as a safe haven asset. So if we look, for example, we can have a look first at the euro Canadian dollar. So euro Australian dollar first. The euro Australian dollar, it dropped by a staggering 4.87%, or 759 pips. Again, if the previous movements they were unheard of, then this is also a pretty impressive move as well, considering we could have also moved by a total of 1,000 pips in just a matter of a week. Meanwhile, the euro Canadian dollar, it also dropped quite heavily as well. This one fell by 2.86%, or 409 pips. One can also suspect that, the main driver for these currency pairs for next week is still going to be the ongoing conflict, as supposedly one of the most, if not the most, important piece of events for the markets for the next couple of weeks. Now, interestingly, we also had the NFP report today, which is also considered to be one of the most important piece of events for the currency markets, but it was obviously overshadowed by the current situation. Nevertheless, the report did return a very strong positive result, showing that the US economy added a total of 678,000 jobs, while the expectation figure was 400,000 new jobs. If we look at the euro dollar, we'll be able to see that the prices did fall as well. But again, I would say the main currencies in focus were essentially the safe haven currencies, as well as the ones related to some of the commodities such as oil and gold. It leads me to the next topic, which is obviously going to be covering oil and gold. We had no surprises here either. Oil prices, they skyrocketed by 25.58%, or $23.50 over the course of the week. This week pretty much made it was as much as half of the total move for the whole year so far. Since the start of the year, oil prices have risen by a total of 53% or $40. We can also add some indicators as well, such as the RSI and also a moving average. Again, you can just edit the settings according to your liking by just right-clicking on the indicator itself. And we can clearly see the picture being painted with the RSI currently sitting at the 81 mark, and also the current 21 period EMA is showing a reading of around $84. And we can see the price is still trading all the way up here at $113. Now gold, it also rallied strongly during the week, with prices being boosted as much as 4% or $78. You'll be able to see the strong movement from the chart itself as well. The RSI is currently around the 73, dropped a little bit now, it's at the 69 mark, with the 21 period EMA sitting at 1,136, while the prices, they finally broke above the significant 1,900 level. We saw last week how we did break above 1,900, but towards the end of the week we closed back down below it. Well, now it broke back above it, and it's actually even trading closer and closer to the $2,000 mark, which is essentially $32 away. So yeah, there you have it with regards to the look back and review for this week. Definitely stay tuned with the markets for any further developments over the weekend, as they could very well shake things up with the open on Monday. So I hope you enjoyed today's video and you found it useful, and I'll catch you all in the next one. Till then, trade safe.